What's up, traders? Just want to hit you with that crypto monthly market wrap up, and we're going to focus in on crypto total market cap. That way we can get a great idea not only where Bitcoin is going, but altcoins as well, and what the overall trend is right now and then going forward as well. Before we jump in, I just want to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, now that we got that out of the way, let's take a look at what we have going on here. So this was our low from 2018/2019, the bottom of the last crypto 4-year cycle, and that was at about $92 billion. We then came out of that range, spiked up here and got up to 353 billion, and then we had the pullback into Rona all the way back down to $132 billion total market cap. After that, we went on the epic bull run, and that took us all the way up here at the peak of just about $3 trillion market cap. And then we sold off pretty violently in the bear market there. And as Bitcoin hit about that $15,000 level, the market cap bottomed at about $752 billion. We then popped up here now and we're back over $1 trillion. We're actually at 1.15 trillion. And the reason we're specifically focusing on those levels is those were key swing areas to the upside, to the downside, to the upside, to the downside. And now the real question is, as we're swinging back to the upside right here, where are we going to peak out? Did we already peak? Are we very close to a peak? Or is this just a bottoming pattern that's going to lead us on an epic rally here? So if we zoom out a little further and take a look at this, this was our massive bull market. And then once we flipped underneath the 200 exponential and simple, that was our bear market in the crypto total market cap. And then once we got back on top of them and flipped them blue again, that was our bull market in crypto market cap. Here we kind of oscillated around. We had a little bear, a little bull, a little bear, and then we went into the actual bull market. We saw weakness when the 200 simple got on top right here, but we didn't actually flip into the bear market until right around here in February of 2022. And now what we saw happen recently and why we've been so bullish on crypto is because we got back above the 200 exponential and simple, back above $1 trillion total market cap. And now both those 200 exponential and simple moving averages are blue. So a lot of things can happen from this level. So like we always say, we're going to focus more on probabilities, not certainties. And what we know is the probability of exponential gains goes up substantially once we see the blue slope line on the 200 exponential and simple moving averages. So once we go into that confirmed bull run, the biggest gains have a good possibility or probability of happening. And the same way with when we're underneath the 200 exponential and simple and their slope to the downside, we know that the big losses come after that takes place. So even though it doesn't have to happen, the probability goes up substantially once those moving averages are trending to the downside. And same with the bull run. We could end up in a situation like this where we flip them bullish, we go on a nice little run, and then from June of 2019 until basically September of 2020, over a year, we basically went like sideways to down before we took out that high again. Even though we had confirmed into a bull market, we chopped around right here and went back and forth between bullish and bearish before eventually the market decided we are in a bull market and started trending to the upside. And that's when the parabolic exponential gains happen. And that's what we're trying to capitalize on. And same thing here, when we flipped into that bear market, we were in a massive bull market, and then here we broke down and technically started to look bearish. We came up, put in that lower high, and then here we confirm into that bear market. Now, the same thing could have happened. We could have oscillated around here and then went back into a bull market. It's definitely a possibility. It could have happened. But in this case, the big bear market came afterwards. And the thing that always happens before a big bull market or a big bear market is the 200 exponential and simple moving averages always flip either bearish or bullish. So even though sometimes they'll give us a false signal and chop around here and we'll get a consolidation phase, don't think of it as them being wrong. Just think of it as essentially a battle taking place. Sometimes the bulls are winning, sometimes the bears are winning, but there's no clear winner in the war. And then once we go into an actual bull market, that's when the actual war has been won. The bulls have won the war, and now we're going parabolic until eventually, you know, the bears, there's a little battle taking place up here at the top, and then eventually the bears win the war and we go back into a bear market. And now in the meantime, we don't know for sure, are the bulls going to end up winning the war, or are they just winning a battle right now? So we want to be forever vigilant as to what could potentially happen in the markets, but the focus stays the same until that happens. Right now, we're focused on the actual trend of the market. And the crypto market right now has confirmed back into a bull market. Now we know that this could fail at any point in time. So what would cause this to fail or second guess that we're in a bull market? We would have to break down below 1 trillion, which is a 200 exponential moving average, and then break down below 963 billion, which is the 200 simple moving average. And then we would have to spend enough time underneath those levels, underneath 950 billion, let's say, for those to flip back red. And then we would say, okay, it chopped around for a bit. The bulls had an opportunity to take control, but the bears took back over, and we're going to go into an elongated bear market back to the downside. And the same way that as long as we're above those levels and they're still blue, we're going to assume that the trend is still bullish to the upside, which it is based on the indicator oscillators. And then the potential for those exponential gains in the crypto space are much more likely to happen. There's always a possibility we could be trending to the downside and then suddenly we see a massive gap up before the lagging moving average indicators can catch up, so they can't predict the bull market. But it's very unlikely that crypto is just going to jump up a few $1 trillion and the moving averages aren't going to be able to keep up, or vice versa to the downside. So let's go ahead and switch back to our regular candlestick pattern here. And we're going to turn on the drawing tool. And I just want to focus one more time on how the crypto cap has operated in the past. So this was the bear market in 2018, and we see we operated inside this channel. The majority of the time we were actually on the top of the channel, and then we eventually broke out to the upside, and then we consolidated back down inside of a descending channel. And then eventually we broke out of that descending channel, and then we started to form our new range. The peak right here, a trough right here, and then essentially that was our bull market. All took place inside of this channel. And then as it got weaker and weaker, and then we eventually broke down from that channel, that began the bear market and consolidation phase. So right now, we don't know, are we just in one of these corrective little bounce channels to the upside, the little short-term channels, or is this going to turn into a new bull market? But in this case, the reason I have these two in white right here is because they were essentially corrective portions of a move. So here we have a big downside move, and then we have a corrective upside, and then we have corrective of that previous upside, and then we go into a new bull market. So we have this massive bull market, and then we're in a corrective phase, and then we're breaking out of that. So we're correcting a correction. So the real question is this going to be the start of a new bull market, or are we going to correct and then continue to the downside? But if we zoom way in and focus on this little corrective phase that's taking place right now, and this was essentially from the bottom in crypto up to our recent top in crypto, we have a very clear defined range with the white channel right here. So we just bounced off the top of the channel and couldn't get through it. And now we are losing the heart line of that channel. We're back testing it currently. So if and when we continue to correct to the downside, which seems like the more probable situation right now, 1 trillion is going to be that target, 1.05 trillion. And that's also our 200 exponential moving average. So when we got above the 200s, we retested the 200 exponential, then we retested the 200 simple, then we went to new highs because buyers stepped in at a higher low. So when we come down here again, if we find support at the 200 exponential and then continue to the upside, we'll have another in our series of higher lows, and then we'll likely go on to make a new higher high. We could even make a new higher high before this takes place. It doesn't have to happen in a specific order. The main purpose and the main thing that we're looking for is as we transition into this new bull market, we have 200 exponential and simple with blue slope lines. We now want to be buying the dips. So there's still going to be corrections inside this range, and crypto is down 10, 15, even 20% from the recent highs, depending on what crypto you're looking at. And we're likely to see some further downside. But the difference being, when we were in the bear market, we were selling the rips. Now that we're back in a bull market again, we want to be buying the dips. And as the momentum continues to pick up, the dips will get bought sooner and sooner. So right here, we break through those levels and the dip gets bought at the 200 simple. If we come down here again and the dip gets bought at the 200 exponential, then we'll likely have a move to the upside and then eventually another correction. And when we do, we probably won't even make it to the 200 exponential because more and more people will be front running each other to get an opportunity to buy that dip, expecting further upside as the momentum builds. And that's how you eventually end up going parabolic in a new bull market. And that's what we're looking for right now. And while it doesn't have to happen, this consolidation could fail, this bull move could fail, we could flip back to the downside and go much lower. We could consolidate, still put in a higher low, but go sideways for months. Anything could happen. But the probability of us getting exponential returns in the crypto space is going to happen when the total crypto market cap is in a bull market. Because it's very unlikely Bitcoin is going to go in a bull market without altcoins. It's very unlikely that altcoins would go in a bull market without Bitcoin. One could happen before the other, but on a long enough time frame, both will be in a bull market together because they have an extremely high correlation. So by looking at this, we can take out all the noise about a specific crypto and just focus on the overall crypto space and where the money is going. And we know that if there's more money going into crypto, that the market cap will be increasing. There's other ways the market cap could increase as well if the circulating supply is increasing. But it's impossible for money to be flowing into crypto and the market cap not to be increasing as well. So we don't want to confuse causation with correlation, the same way with the bull markets and exponential rewards, the same way with when we see the flows coming into the crypto space. So for right now, the key areas I'm looking to buy the dip on, because we are in a bull market, is around that 1.05 trillion mark, the 200 exponential moving average on the daily, as well as the bottom slope line of the white ascending channel, and they come into contact at that exact level. So we'll just go ahead and put a little box in there, and we'll turn that one green for our area of interest. And then alternatively, if we broke down from that level, maybe we get a bounce and then put in another lower high and then go lower, and it starts looking a little sketchy. So let's just say things are not going to plan and we end up breaking down from this channel and start correcting. We come down here, we lose support, and then we come down, get the measure move of the breakdown. We take out that previous low and just everything is looking terrible. And it looks very obvious that we're coming back down to the lows and probably going to go much lower. We'll have lost at 200 exponential. We'll have lost at 200 simple. And when it's all said and done, everyone will be very, very bearish. But the truth is, after we complete that measure move, even if we lose all these key support levels that we've been building and the worst case scenario starts to come true, if that's where we bottom at, a higher low from the previous low right here, that's going to look extremely bullish to me. And that's going to look like a less exaggerated version of what we did in 2018. So if we just zoom out right here, this is the area where we're probably at right now in the equivalent cycle. And then here we are breaking out of that downtrend, that corrective phase, confirming into a bull market. And while we didn't get that same parabolic move that we got back in 2019, we're back on top of the 200s and things are good. And maybe if we consolidate long enough, we will get that move. But regardless, we could get a little fake out right here. This breaks down and starts looking really bad. But actually, we still put in a higher low. And then after that, we reclaim the 200s. The consolidation phase ends and the bulls win. And then we go parabolic. So if you believe in crypto and you understand technical analysis, you'll understand that on a long enough time frame, if crypto is successful, the market cap's going to continue going up and we're going to go into another bull market. But regardless of how bullish you are on crypto, we need to understand there's a high probability that we could still lose 30 or even 75% of the value of any of the cryptos from where we're at currently. So just if this scenario played out from where we're at right now and we got the measure move to the downside, that's about a 27% move. And realistically, from where we're at right now, taking out the lows would be a 36% move. So for me, as long as we're above the 200 exponential and simple and they're sloped to the upside, I'm going to be buying those levels around 1.05 trillion. And depending on how long it takes to get there, somewhere around like 960 billion as well for the 200 simple. But I'll be buying with a lot less conviction because at that point in time, we'll have broken down from the ascending channel. And if that does take place, if we do lose the 200 simple and continue to get the measure move to the downside, I'll be much more cautious about the levels I'm buying because I'll be looking for the bulls to come back in and attempt to defend the lows. But once the 200 exponential and simple have flipped red, again, I'm going back to selling the rips as opposed to buying the dips. And let's just jump real quick over to our longer time frames. If we just look at the weekly chart real quick, we'll see we're back on top of the 200 exponential and simple for now. We're back testing previous resistance. So the key here is to just stay above those levels. And so that line in the sand is basically at 1 trillion. So on the weekly time frame, as long as we're above 1 trillion, things still look okay. But if we start to lose those levels, then we really have to pay close attention that crypto is not going to be going much lower. And then if we just switch over to the monthly real quick, we'll see again, we were in that bear market once the 821 bear cross happened here, and then we got back above it, but then we did that consolidation phase, but we never actually crossed the 821 bearish again, even through all of that bearish consolidation, and then eventually we ended up going much higher. So here we haven't actually flipped the 821 bullish again, so it's actually not nearly as bullish as we were here when we got that big candle that immediately got the cross and then followed by all the consolidation. So maybe we'll just kind of consolidate around this area for a bit, and these will continue to get closer and closer together before we eventually either bull cross them back to the upside or bear cross them back to the downside. But we do know for now that Bitcoin is looking slightly more bullish than this. So perhaps Bitcoin starts to build up momentum, and that can help pull along the alts, which are currently dragging on the entire crypto space. And if we just pull up the indicator oscillators, we talked about this on Bitcoin as well. When we get those hard sells and exit the bullish control zone, that's where we typically go into the bear markets. Here, we get the hard buy signal and exit the bearish control zone right at the top. So we build up just enough momentum to trigger the signal here, and then we go into a 66% drawdown and long consolidation before we eventually go into the bull market. Here we exit the bullish control zone, hard sell signal, we go slightly higher and then go into the bear market. And here we're exiting the bearish control zone, or we're very close to it, and we're also very close to printing the hard buy signal. So while eventually that hard buy signal leads to thousands of percent gains and a bull market, we know that it can easily have 66% drawdown or more, possibly less in the meantime. So on these longer time frames, when we get a hard buy signal or a hard sell signal, we have to be patient and understand that each increment on this time frame is a month, and we could see months and months go by before we see the desired result because we're on a monthly time frame and it's based on momentum. So yeah, that's our crypto monthly market wrap up. I know it was weird to not actually look at any cryptos, but I think right now focusing on the total crypto market cap and seeing what the entire space is doing is going to give us a much less cloudy view as to what's to come. So while right now the monthly is starting to look decent and we could be very close to starting that new official crypto bull market on the monthly, we could easily still have a big drawdowns, and crypto has come up quite a bit off the bottoms. So we want to continue to be responsible with our risk management and position sizing, focus on momentum, and respect our system. Obviously, anything could happen, but we know as long as we're in a bull market for an individual crypto or stock, the probability of those asymmetric gains goes up substantially. And the same thing in a bear market. We want to protect ourselves from any large losses. We want to let our small losses and small gains balance each other out. And then in the end, all we're left with is those big gains. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, yeah, that's it for today. Crypto Trend Trader. That was fun. I'll catch you on the flip side.